And the recording is on. So once again, welcome everyone. It's Flipping Markets or Marcel here. Welcome everyone. This will be today's backtesting session. And some infos before we start the session. In this session, we will backtest Friday's price action from this week. And this will be a bit of a different backtesting session than usual because I'm telling this for the newcomers, for the new members. Usually in these kind of backtesting sessions, we choose a random day with a random number generator, and any number pops up, we will backtest that day that has been popped up. But in this session, we will backtest this week's Friday price action, because I just want to talk about that price action that has happened on Friday, because it was actually interesting. It was quite a good price action, and creating a recap video or a case study about that session wouldn't be enough, because there's a lot to say about that session, a lot to say about that price action, and creating a backtesting session around that price action around that day is much easier than just creating a recap video. Because if you don't understand something, you can just simply ask. There will be a question and answer section at the end of this session. So please, if you have got any question, just only ask those questions if I'm asking you to ask those questions. And don't interrupt me when I'm talking, please. And if you got any question, just type it in the chat or raise your hands. Just don't interrupt me. Only use your microphones if I'm asking you to use your microphone. If I'm not asking you to use your microphone, just don't use your microphones, please. And basically, that's all about the rules. And as I said, we will backtest this Friday's price action, which is the 27th of May. And yeah. First question, guys, what do we have to do before starting every single backtesting session, before starting every single live session, etc., etc., etc.? You can use your microphone now to answer this question.
Check the news.
Check the news.
Check the news, exactly. Thank you. And I just saw a question on the chat. Can you discuss what's liquidity and what's not? Kiru, basically, there's a video course about this topic. There's a video course webinar about this topic too. There's recap videos about what's liquidity, what's not. So please just check the whole course, check the whole team webinars, check all of the recap videos, and you'll know. No, we are not generating a random number. As I said, we are backtesting this Friday's price action. So yeah, the first step is before we starting the backtesting session is to check the upcoming high impact news, if there's any. As you can see in this session, we can find one high impact news, which is the 2:30 p.m. USD core price index. So yeah, we're having a high impact news released 30 minutes after the session opens. So in my time zone, 2 p.m. is the New York Open, and this news is being released after 30 minutes of the session has opened. So we'll be paying attention to this high impact news. But first, we have to analyze the whole price action. We have to analyze the higher time frame. We have to analyze the 4-hour, 15-minute, 1-minute, 5-minute, etc., and create a tab analysis. So first of all, I will just replay price to that specific price action region, and that was 27th of May, and searching for 2 p.m. Okay, here's 2 p.m. And at this region, New York will open. This is the last candle before New York Open, and we'll start the backtesting now. We'll start the analyzing now. Let me just change the color of my keyboard because it's annoys me. Okay, so let's start with the 4-hour chart, and let's start with a clean chart first of all, because it's much easier if you're starting with a clean chart. Okay, I'm gonna leave this line right here because that's the weekly end line. This was the last recent weekly low point, as you can see. This was the last recent weekly low point right here, which is called the change of character here to the upside and here to the upside. And price is currently inside of this weekly low point. Okay, changing back to the 4-hour chart, we've talked about this weekly low point several times in the previous webinars, previous recap videos. So please just watch those webinars. There's literally a higher time frame analysis video in the recap video section, and there's also a webinar about the higher time frame. So if you don't know the higher time frame perspective, I mean the weekly and the daily, please just check those webinars after this webinar because it's important for you to know. So I just continue with the 4-hour chart. Okay, as you can see, price is reacting on this weekly low point right here. And after a reaction, it just created a huge inefficient movement to the upside and reversed the overall price action from bearish to bullish. So price was coming in an extremely bearish trend. As you can see, price was in an extremely bearish trend, creating huge inefficient movements to the downside, breakout structures over and over and over and over again, creating pullbacks, 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 pullbacks. And currently, price is reversed again for another pullback. But this pullback seems like it's not just a simple pullback, it seems like a trend reversal. And let me tell you why. Because prices broke above lots of important supply levels, and it has literally changed the trend. And it's not just a simple liquidity calling pullback. I mean, liquidity collecting pullback, because prices already collected liquidity. Prices collected liquidity, and the liquidity collection wasn't enough for price to reverse to the downside again. And it keeps breaking structure on the 4-hour chart continuously. So this pullback, this touch of the weekly low point, can be considered as a just a pullback for a supply zone. This could be considered as a trend reversal from bearish to bullish. But if you take a look at the daily chart is still, it still looks like it's just a pullback of the bearish movement, but the 4-hour chart has already turned into bullish. But we really care about the 4-hour chart because that's our main time frame for the bias. Weekly and daily chart are for just higher time frame purposes, but the 4-hour chart is for the overall bias. But on the daily chart, as you can see, it was just a liquidity sweeping movement right here, and price is on the way up to collect some liquidity and tap into a supply zone here or here, because as you can see, in this supply zone is part of the liquidity. This daily supply zone is hardly part of the liquidity. It's part of the first, second, third, fourth tap, and above this zone we can find the good supply zone on the 4-hour chart. So daily chart still looks like a pullback of the bearish movement, and this could be still a pullback, and after this we could see a reversal to the downside, which I'm actually expecting. I'm still expecting a reversal to the downside. I'm still expecting inefficient movement and trend continuation, bearish trend continuation, and weekly low break to the downside right here. So these are my expectations, but we can't really know, can't really tell what will happen. All we have to do is follow the price action. But knowing the fact that the 4-hour has turned into bullish, our main higher time frame trend will be bullish. So we just have to memorize this. We just have to keep this in mind, that the higher time frame main trend for us currently is bullish. Meaning the 50-minute trend, if the 50-minute trend is bullish, then that will be the main trend of us. And trading the 50-minute main trend, trading the 50-minute bullish trend will be the highest probability trade. And trading the short trade, trading the short opportunities on the 50-minute will be the lower probabilities to trade, because these trades, these lower, 50-minute bearish trades, has a lower chance to play out because price can react on any demand zone at any time, literally. So just keep this in mind, that the higher time frame trend is still bullish. Okay, let me just analyze the 4-hour chart. As you can see, here was the reversal point, and after a reversal point, price has stepped into this supply zone, and after a tap, there was a tap on the 50-minute chart, but on the 4-hour chart, it's just one simple breakthrough candle, as you can see. So after a breakthrough, it has created a reversal to the downside, a pullback of the bullish movement. So the first character changing movement on the 4-hour chart has happened here. After this, price has created this demand zone that has caused the overall change of character here to the upside, but this demand zone has been left unmitigated. So this demand zone is still unmitigated. This demand zone is still the origin of the whole movement. As you can see, the character changing movement has happened from this demand zone. So I'm going to mark this demand zone as our character changing extreme demand zone. This is the extreme of the whole bullish movement that you can see here. Okay. After this, price has created this pullback, as I said, and created another breakout structure here to the upside. So here was a breakout structure to the upside, which has been caused by another 4-hour candle. And anyone who raises their hand first can show me that candle that has caused the last recent breakout structure right here at this region. Marvi, please show me that demand zone. Just draw on my screen. Yes, exactly. That was the demand zone that has caused the last recent breakout structure. And that's the last recent demand zone. That's the demand zone because this has caused inefficiency, liquidity sweeping movement here, as you can see, swap liquidity, and created the breakout structures, of course, right here. So after this, price has arrived in a really significant supply area, which is this one, as you can see. This supply area, not really this one, but we could say this one's a supply because it has been not mitigated yet. So after arriving to the supply area, as you can see, this supply had lots of liquidity just below it. So there was the first step of the trend line. Here's a trend line, first step, second step, third step, fourth step. So there's a trend line liquidity built up for the supply zone. And as you can see, price just blew through this supply zone. It didn't even respect this supply zone, didn't even care about this supply zone. It just blew through this supply zone without a single care, without a single reaction on the 4-hour chart, meaning the 4-hour trend has really reversed the bullish from bearish. So we can say that the 4-hour trend is bullish and demand is extremely in control. Okay, after this, what can we see? We can see that price has created another breakout structure to the downside right here. But before this breakout structure to the upside, price has created a supply reaction once again. And please, whoever raises his hand first can show me that supply zone that price was reacting on. And that was chilling markets. Exactly, thank you. Price is reacting on this supply zone at this region, as you can see, inside of the bullish movement. And this was a significant supply zone for us because this supply zone could break below weekly. I mean, this was a daily demand zone. This was a daily low. This was a daily, really, really significant, really, really important demand zone, demand level that price just broke below. And the break has happened from this supply zone, as you can see. So price has reacted on this zone. As you can see, here was a reaction. And after a reaction, it just changed character to the downside because the last recent low point that is caused the last recent breakout structure at this region was this low point right here. And price has just changed character here to the downside, meaning the 4-hour change character has happened, meaning the actual change in the trend could also happen and we could see bearish movements. But this plan, this plan didn't work out because as you can see, after the change of character to the downside, price just didn't respect this supply zone up here that has caused the change of character and just immediately broke above this supply zone. There was a reaction, there was a first reactional candle, second reactional candle, and after this price has just created another breakout structure here to the upside and the change of character back to the upside and a supply break. So that was a breakout structure, left breakout structure to the upside that has been caused by some sort of demand zone here, which can be found on the 4-hour chart, because as you can see on the 4-hour chart, it's all efficient. Every single candle right here is efficient. This is efficient because the high and the low meets right here. This is efficient because the high and the low meets right here. This is efficient because the high and the low meets. This is efficient because the high and the low meets. So basically, this is all efficient. On the 15-minute chart, there will be inefficiency, but the 4-hour chart is efficient. So we have to find a good demand zone on the 15-minute chart that has caused the breakout structure here to the upside. Okay, knowing the fact that the trend right here is still bullish, and price just keeps breaking structure to the upside continuously, it just keeps literally respecting demand zones and not even tapping into demand zones, because as you can see, after a character change of movement, price didn't even tap this demand zone. After a breakout structure here, didn't even tap this demand zone. After a breakout structure here, didn't even tap this demand zone. After the change of character and breakout structure, didn't even tap this demand zone. So yeah, price just keeps breaking structure to the upside without tapping into significant demand zones. So it's better to find the 15-minute demand zone at this region, which we can find a reactional point on and the character changing point on, than just searching and waiting for a 4-hour demand tap right here actually. And of course, this could be part of the liquidity. This could be part of the liquidity, but knowing the fact that the trend is extremely bullish and it just keeps breaking structure continuously to the upside without a serious pullback and retracement, we can find good long opportunities. Okay. Basically, that's all about the 4-hour chart. Only one more thing is that we have one more supply zone that is significant for us. And the supply zone is this one right here, because as you can see, this supply zone has caused the breakout structure here to the downside. This supply zone has caused a nice breakout structure, swing breakout structure, because this was a swing low point. And this supply zone has caused a swing low break to the downside. So this will be our next target point for the upcoming longs. Okay, as I showed you, this is the daily demand zone refined on the 4-hour chart, which has liquidity below it. So this is some pre-week analysis. I'm expecting this supply zone to be tapped on the next week, but I will talk about this in the next week's live session. But I'm actually expecting this supply to be tapped and this liquidity to be swept. And after this liquidity sweep and supply tap happens, we can expect a reversal to the downside. But this is too far away. Let's just focus on the backtesting session. Okay, so that's all about the 4-hour chart. Let's just switch to the 15-minute chart and see the 15-minute zones that price has just created. Okay, so here was the last recent breakout structure. And if you don't mind, I will just, no, I won't. I will keep that zone there. And take a look at the 15-minute chart. What can we see on the 15-minute chart? As you can see, this was a change of character changing movement on the 4-hour chart. And after a character changing movement, of course, the 15-minute chart has changed character back. And the bullish character changing movement was still in control, creating demand zones over and over again, breakout structures over and over again, creating demand zones, respecting demand zones. And there was the 4-hour zone tap, as you can see on the 15-minute chart. This was the 4-hour zone tap. And this 4-hour zone tap couldn't change character to the downside, couldn't strong change character to the downside. Basically, without even body breaking below the last low point, it didn't really change character. And this was the last recent valuable low point for us. So there was no character changing movement right here. So we couldn't really consider this as a character changing movement on the 15-minute chart. And after this, the price just reacted on this demand zone. It just blew through to the upside and created another breakout structure on the 4-hour chart here. So basically, that's all about the higher time frame analysis. So let's just search for the 15-minute zones that we could expect a reaction on this session. As you can see, these movements on the 15-minute chart are also efficient. So these are all efficient movements. We could only see the less recent inefficient movement right here, as you can see, and this inefficient movement area has been flipped by a candle, and whoever raises its hand first can show me that candle that has flipped this demand zone right here. Chini markets, please show me that candle. Exactly, thank you. This demand flip has been caused by this supply zone up here, as you can see. And you could ask that, hey, flipping, isn't this unmitigated? I mean, isn't this mitigated? This has been mitigated by the following candles wick right here. But no, it's still unmitigated because for a 15-minute zone or a 4-hour zone, we need a 15-minute mitigation. I mean, 15% mitigation, 50% mitigation to consider it as mitigated fully. So if the 50% is not being mitigated of the whole of the zone, so price do not mitigate the 50% of the zone, we can't really consider that as a fully mitigated zone. And this rule only leaves on for the 50-minute zones and the 4-hour zones. For the 1-minute zones, any kind of mitigation is enough. Literally any kind of mitigation, 0.1% mitigation is enough for the 1-minute zone. But for a 15-minute...
Sorry, please, can you repeat it again? Okay. I'm sorry, but please, can you repeat it again?
I said that don't interrupt me, please, when I'm talking. Okay, so for a 15-minute zone and the 4-hour zone and the 5-minute zone, we need at least a 50% mitigation to be considered that zone as fully mitigated. For a 1-minute zone, we need any kind of mitigation. So as you can see, this candle has not been mitigated on the 50% yet. So this can be considered as fully mitigated. And this zone was the cause of the flip right here, the flip of this demand zone right here. And this zone has flipped this demand zone with a body break to the downside, as you can see. So this is a really, really strong zone. And this movement right here can be actually considered as liquidity for the upper area, because this area, this supply zone has no inefficiency, as you can see. Inefficiency can be found right here also because it has been filled up, but it's still a supply zone. We could still expect a reaction, or we can still target this zone, or we can still expect a change of character on this zone. So this is still a valuable zone for us because the 50% of the zone has not been mitigated yet, but it flipped the demand zone. Okay, so let's just take a look at this price action region and find a good demand zone that price could actually reverse on, because as I said, we need a 15-minute demand zone that we can expect a reaction on. What can we see in this region? We can see that price is currently reacting on demand zone here at this low point. Sorry. So price is currently reacting on this demand zone at this region, as you can see. And this demand zone is actually pretty valuable because this demand zone was the cause of the flip. Not technically, not directly was cause of the flip, but as you can see, this demand zone caused this last inefficient push to the upside. There was a reaction, and from this demand zone down here, there is no inefficiency that has caused the flip. There's literally no inefficiency that has caused the flip. Basically, that's the origin. This deeper demand area is the origin of the overall flipping movement of this supply zone, and this could be considered as liquidity. This could be considered as liquidity built up for this deeper area. So technically, this is the origin of the whole flipping, supply flipping movement. But below this demand zone, we could also find some good reactional demand zones. For example, this one that has caused a breakout structure here to the upside, as you can see, or we can even call this as a flip zone, as a 15-minute flip zone, because this zone has flipped this supply zone up here with a 1-minute inefficient movement and has caused the top of this 4-hour supply zone. But this zone is still valuable than this lower demand area, because this 15-minute zone could have flipped a 4-hour zone. This 15-minute zone could have flipped a 15-minute supply zone. So a 4-hour supply that has been flipped by a 15-minute demand zone will be stronger. So this demand zone will be stronger than a 15-minute zone that has been flipped by a 15-minute zone. Do you feel the difference? If a 15-minute zone can flip a 4-hour zone, that will be much, much stronger than a 15-minute zone that can flip a 15-minute zone. And yeah, basically, that's the reason that I choose this candle over this candle, because this isn't a real demand zone. This can be considered as a demand zone because basically this demand zone is a liquidity for the deeper demand area, and there's literally no inefficiency only at this part of the movement. But this part of the movement caused literally nothing right here. The breakout structure has been caused by these efficient movements. The flip has been caused by this efficient movement. So this is just liquidity for the deeper area. And as you can see, price has tapped this demand zone, and it's currently reacting on this demand zone because it has tapped, reversed, and created a V-shaped recovery. Sorry, no, I won't repeat it because you'll be able to see the recording. We just have to move on. Okay. After this demand tap, what can you see right here? you can see the price has slightly changed character here to the upside, right? The character changing movement has happened with a week after reacting on demand zone, and still keep that in mind that the overall trend, overall higher time frame trend is bullish. It's extremely bullish. Even the 50-minute right now is bullish. I mean, the 50-minute has turned into bearish because it changed character here to the downside. So after this movement, we could technically say that the bullish control has came back into the market because demand has been tapped. A really, really valuable demand has been tapped right here, and it has partly took over control from supply. But after a change of character has happened here to the upside, demand has took over fully the control, right? Partly in control, character changing movement to the upside, fully in control. So yeah, let me just drink a few sips, sorry. Okay. So I believe these two demand zones will be perfectly enough for us, because if the one demand zone can give reaction, which has been given, then we can expect a reaction on a deeper demand area. But it's literally unnecessary to mark these demands out, because this demand zone has already given us a reaction and it has changed character to the upside. So what can we do after this scenario has happened? I'm waiting for the answer. Raise your hand, please, if you'd like to answer the question. Anyone? Okay, so I'm going to continue.
Go to
1 minute check.
Not 1 minute yet? 5 minutes.
I need 5 minutes.
We have to go down to the 5-minute chart, exactly. And after going down to the 5-minute chart, what can we see? That the change of character has really happened on the 5-minute chart, right? Here was a real body breakout structure, I mean body change of character, because this character changing movement has happened with the body closure, and the body has opened above this character changing movement, as you can see. So the character changing movement has technically happened. Okay, what can we do after this? We can just simply mark the demand zone out right here. That was the cause of the overall character changing movement. As you can see, this demand zone has caused the character changing movement. This was the origin of the character changing movement. And these upper price action areas can be considered as liquidity for the demand zone. That was the origin of the character changing movement. So this is liquidity built up for the origin of the movement, origin of the demand. And as you can see, after this price is on the way down to mitigate this demand zone. So as we usually do, we will build a plan build a narrative, build a plan for this session. But we already know what has happened because we traded live on Friday. But still, we have to build a narrative. And the narrative is the same that I built on Friday, because I sent you the markups. And in the markups, I told you that if this demand zone can give a reaction for us, we can go along up to this supply zone. If this demand zone can give a reaction for us, then we can go along up to this supply zone. And if some deeper demand area can give a reaction for us, we can go along up to this supply zone. And I only gave you these scenarios because I wasn't aiming for short scenarios, because the trend was extremely bullish. Mainly, I was extremely looking for long scenarios until this supply is being tapped. As I sent you in the markup updates, is this supply is being tapped and this supply can give us a reaction, then we can aim for short scenarios for some deeper demands. Because if this demand reaction can take this supply out, and if it's not strong enough to take this supply out and break above this supply, then price more likely won't continue the overall bullish movement to the upside, because it wasn't strong enough to take a simple supply out right here. So after it changes character on this supply zone, we can simply aim for deeper demand areas. For example, like this one, because if this demand zone can take the supply out, then this demand zone will be able to take the supply out, because price will collect more orders right here at this region. It will collect more orders with this short movement. It will split all of the liquidity from the long orders right here. It will tap into this less recent demand zone. And after less recent demand tap, it will be able to actually create a character changing movement right here, which will be strong enough to break above this supply zone and break structure to the upside. But if that demand zone won't be strong enough to create a breakout structure to the upside, and it breaks, then we can aim for deeper demand areas, and we can aim for deeper 4-hour demand areas, for example, like this one. So this is the overall plan. This was the overall plan for Friday too, as I sent you in the markup updates, as I sent you in the markups too. And this is a pretty solid plan, because it reflects to the main trend, it reflects to the overall higher time frame trend, it reflects to the lower time frame trend, it reflects to the actual price action that was happening on the chart, which has been bullish because price has changed character to the upside. And it has reflected to this flip zone also, because we had a plan for this flip zone also. So we have created a plan for every single possible reactional point that we can see on the screen, that we can see on the chart. So we had a plan for everything, and we still have a plan for everything. So we already know what has happened. But let me still break down those movements, because actually those movements were quite interesting, because a lot has happened inside of these movements. So let me just switch to the 1 minute chart. And first of all, I will ask you if it was understandable or not, or can you follow me or not? Yes is the yes, no is no. So can you follow me? Okay, perfect. Thank you, guys. Thank you. Appreciate it. Sorry, I just forgot to mark one more thing. The 5-minute refinements and demand zones, of course. I didn't actually refine these zones. I won't refine the supply zone, because as you can see, actually we can refine the supply zone. We can refine the supply zone for this 5-minute candle, and I will keep the refinement. Because as you can see, this 5-minute refinement has not been tapped yet. And this supply zone has caused the overall flip of this demand zone. And this supply zone has not been tapped yet, only the 50-minute zone here, as you can see. So price more likely will mitigate the 50% of the 50-minute candle and mitigate the 5-minute candle inside of this 50-minute candle. Right? Right. Okay. What else can we do? We can mark more supply zones out, not with this tool, with the box tool. So we can mark more supply zones out that we can expect a reaction on. For example, this supply zone. We have this supply zone, which is the strong character changing movement right here, because this is the weak character changing movement. This is a strong character changing movement for the longs. If this supply zone is being changed, then we can really expect that this supply up here, this 50-minute supply, will be tapped. If price can change character, I mean, can break above this supply zone and character changes right here, then we can expect that price will go down to this demand zone. So it's basically all about price action. It's all about the reactional points. It's all about what price reacts on what price doing on some sort of point of interest, on some sort of reactional points. And yeah, this is what's this strategy all about. It's all about reactions. It's all about reactional points. It's all about POIs. We don't have to care about the noise. We don't have to care about shit. All we have to care about is reactional points. All we have to care about is the reactional supply and demand zones and the POIs. That's all basically. So yeah, let me just start the overall backtesting session on the 1-minute chart. If you're ready, guys, I will start it right now. And okay, what can we see right here on the 1-minute chart? We can see that price has caused the character changing movement right here, which has been a body closure above on the 5-minute chart, as you remember. And right here, price has created the character changing movement on the 1-minute chart, as you can see, but this wasn't a character changing movement. So you can't just fall for this character changing movement, because I saw that lots of you guys has actually fallen for this character changing movement to the downside, and you've opened the position right here on this candle. You've opened the position, you've opened the short position on this candle. And let me tell you, why can't you open a position on this candle? Why can't you just simply hop on the 1-minute chart and randomly open positions on these kind of candles? Because of course there was character changing movement. Okay, this was a counter trend. There was several character changing movements. So strong character changing movements has happened, but it's in the middle of nowhere without the proper supply tap after a character changing movement to the upside. And actually in the middle of the extreme bullish trend, you can't just open a short opportunity, short trade after a simple middle of the nowhere character changing movement on the 1-minute chart. You can't just live your life on the 1-minute chart. You have to build a higher time frame perspective. That's why I always tell you to build a higher time frame perspective and trade based on that higher time frame perspective, and not just on the 1-minute chart. And as you can see, this was the 1-minute chart movement. This was the noise of the 1-minute chart. That's what I'm talking about when I'm meaning the noise of the 1-minute chart. This is the noise of the 1-minute chart. Character changing movement has happened. Lots of sellers has entered on this supply zone, actually hoping for the good profits in the shorts, but they will be swept out on this zone. Because why? Prices swept liquidity. This was liquidity. All liquidity was built up for the upcoming longs. Prices swept the liquidity. There are lots of scenarios when price can tap into demand zone after liquidity sweeping movement, because the demand zone is too far away to be tapped, and price actually reverses. Because what happens, I already told you about this kind of price actional analysis. What happens when liquidity is being swept? It actually, there's all the orders. Just imagine, below these points, there's liquidity. We call it liquidity, right? We know that it's liquidity. But what's the purpose of this liquidity? Below these low points, below this trend line liquidity, there are stop losses. Below this low point, there will be stop loss. Below this low point, there will be a stop loss. Below this low point, there will be a stop loss. Below these low points, there will be stop losses, lots of stop losses. What happens when all of these stop losses are being swept out? New orders will be able to be placed in the market, right? All of these old orders, all of these old stop losses will be free at the time that they are being swept. So if they are being swept, new orders could be placed in the market. So immediately new orders, I mean old orders are being converted into new orders. As soon as these orders are being swept out, these are being converted into new orders. So old orders swept out, new orders converted, and the new orders will be the old orders, and those will be the new liquidity points. So orders have been converted, old orders have been converted into new orders at this point, because as you can see, after prices swept all of the liquidity out, swept all of less piece of liquidity out right here with this movement, all of these orders have been converted into new orders. Old, new, new, old. These will be the new old orders because these have been converted. This will be the new liquidity point for us because new orders have been placed right here. And these new, I mean, huge amount of orders have been placed. This will equal the push of the price, inefficient push of the price, because all of these old orders converted into one new order will cause the actual inefficient push of the price. That's why you can see these kind of scenarios after a liquidity sweeping movement, that price sweeps the liquidity and create a huge inefficient candle to the upside. And that's why price can't really tap into demand zones as supply zones in these scenarios. Most of the times, I mean, not most of the times, but maybe 50% of the times, it can tap into a demand zone if you see a liquidity above demand zone, because the convert is being happened so fast. So all of the old orders are being converted into new orders so fast that price can't even tap into this demand zone to pick up more orders. It's the most practical and most useful when price taps into a demand zone after sweeping the liquidity, because these are orders too. This is an order block because there are orders. This will be an order block because orders are resting on this order block. So just imagine what happens if price sweeps the liquidity and taps the order block. Orders are being converted into new orders from these orders, and orders are being converted into new orders from these orders. These two new old orders are being converted into one new orders. That's why you see an inefficient push of price after being demand and liquidity tap. So basically, that's the fundamental analysis behind this liquidity scenario. And that's why price actually reverses sometimes after sweeping the liquidity and not tapping in the demand zone. So that's enough of talking. Sorry for lots of talking. I don't need, let me just ask it. Is it actually interests you? Should I talk more about these, or let's just stick to the technical part? So you're actually interested in this. So I will talk more about this. Okay. Perfect. Thank you. Please remove the drawings. Thank you. Okay. So let's just play price. Guess what? Guess what will happen? Old orders converted into new orders. What will happen? What do you think? Of course, inefficient movement to the upside, because this demand zone couldn't be tapped because these orders has been converted to new orders so fast that price couldn't even react on a demand zone. So yeah, inefficient movement has happened to this supply zone. This isn't a supply zone. You can't open a position on this supply zone because this was just a liquidity sweeping supply zone. Guess what will happen with this supply zone? Take your guesses. Exactly, it will be broken. This supply zone has been broken, and that's all. Let me just read the chat. But is there not more money below the demand zone? Below this demand zone? There could be, but this supply, I mean, this liquidity sweeping movement was perfectly enough because orders have been converted. These orders were enough, these were caused enough conversion to actually reverse price to the upside and create another inefficient movement. So price doesn't have to collect more orders from this price action region because this liquidity was perfectly enough for the reversal. Of course, there are liquidity on the chart everywhere. So you can literally find liquidity everywhere. Liquidity everywhere. But this liquidity was right here, right at this place. And this liquidity was perfectly enough for price to reverse to the upside. And yeah, of course, this was a lunchtime zone too. And sorry, guys, I won't read the chat right now. I just wanted to do a backtesting session. I will read the chat and answer the questions after the session has ended. So, lunchtime zone has been swept out. Liquidity converted into new orders, inefficient push to the upside. What will happen after this? We can expect two things because we built a narrative. We can expect that this supply zone will be broken and we can expect a continuation to the upside. Or if the supply zone can be broken and price can break above the supply zone, then we can expect a change of character right here and continuation down to this demand zone. This is the plan right here. Let's see what happens. Mainly, I was expecting in the session that price will create a break of this supply zone and not a reaction on this supply zone. As you can see, there was a reaction, meaning that this supply zone was valid. It was a really valid supply zone because or this is an order block. Orders have been converted. As you can see, sell orders have been converted. There were sell orders. That's the footprint of the price, but this will be weak. This wasn't strong enough to create a change of character to the downside, and more likely this will be broken. As you can see, price is currently on the way up to break above the supply zone. Basically, the strong character changing movement has happened, because as you remember, this was the strong character changing movement to the upside. This was a strong character changing line, and this is a strong character changing movement, which has happened by this movement, as you can see. So we can really confirm that the trend has turned into bullish. What have we built in the pre-session narrative? That if the trend will be changed to bullish, then we can target this supply zone up here with longs, if you can find a good long opportunity, which has been shown up in the session actually. So let me just show you that movement. After this, as you can see, news have been kicked in. I don't know if you remember, but there were news. These have been caused by the news. As you can see, 230 run, news movement. Okay, these new movements, as I said, all of these news movements will be broken sooner or later. Price will fill up these candles, and more likely these news movements will be broken. So we have a high chance to break above these news movements. I've already created a webinar about this topic, so please just watch that webinar that has been created by this topic. And I don't want to explain it right now. That's why I've created that webinar. Maybe the name is something like big candles or something like this. I will find that session for you after this session. So technically, price has created a character changing movement, right? On the short side. So there was character changing movement. But for a character changing movement to actually happen in a short trade, we need a strong character changing movement, because this is a counter trend. This is a counter trend movement, so you can't really open a position right here on this supply zone. I saw that lots of you guys were opening a position on this supply zone, because you saw that price has changed character here. But this wasn't a character changing movement also, this was just a news movement. And this was just a simple pullback after the character changing movement here to the upside. So higher time frame is in control. Just pay attention to the higher time frame every single time, because higher time frame is controlling the market. You can't just trade on the 1 minute chart continuously without paying attention to the higher time frame. So as you can see, 5 minute change of character weak, 5 minute change of character strong. After a character changing movement, it's just a pullback of the bullish movement and reaction on some sort of second supply zone, demand zone right here. So more likely there was a demand reaction at this region, because price was strongly reacting on this demand. If I play the price forward, you will see that price was strongly reacting on the demand zone. And so more likely there was a demand reaction on the second chart, or on the, 3 minute chart, or on the 5 minute chart, but there was a demand reaction. If I check the 5 minute chart, you'll see that, yeah, actually there was a demand reaction. This demand zone has caused the strong change of character here to the upside. And after this, price has just reacted on this demand zone. This was a demand reaction. So this is just a simple pullback of the 5 minute character changing movement. So what can we do after this case? We can find a good entry opportunity, which has been showed on this specific price action region right here, which I will replay for you. Actually, as you can see the footprint of the supply zone, because there were lots of orders opened on the supply zone. Lots of you guys, I believe, opened this position too, which is a mistake. Sorry for saying this, but this was a mistake, because if you pay attention to the higher time frame, you won't make this mistake. That's why it is really important to pay attention to the higher time frame and not just to the lower time frame. Because as I said several times, if you're living on the 1 minute chart, this will be a good opportunity, because you saw that price has changed character on the 1 minute chart on a strong point and on several places. But this was just a pullback of the 5 minute character changing movement. And how does the structure look like? How does the actual higher time frame structure look like? Breakout structure, pullback, breakout structure, pullback, breakout structure, pullback, breakout structure, pullback. And you can't just open every single position on these kind of pullbacks, because you'll be stepped out. The highest probability to play out, the highest probability setup to play out is that if you wait for a tap of the demand zone, continuation of the bull trend happening into a good long opportunity. That's all. That's why you have to do a higher time frame narrative too. That's why you have to build a higher time frame narrative, because if you're living on the 1 minute chart, you'll be fucked, you'll be swept, you'll be kicked out from the market. You have to combine the 1 minute chart with the 5 minute and the 15 minute. That's all. That's all you have to do. Don't live your life on the 1 minute chart, guys, please, because this will happen. As you can see, after this price has created a range, I will show you that range. That was a perfect liquidity range, and I will tell you about that range. So here's a range. Here's a perfect range. What do we know about ranges? I'm asking you guys, raise your hands if you like to answer. Who was the first? Let me just check. It was Mary. Mary. Okay, somebody else, Fredley or Fredley. I don't know how to pronounce your name.
Freudly. Ranges are getting swept.
Exactly. Ranges are getting swept on both sides. If there's a range, that will be swept on the downside, that will be swept on the upside too. And sorry, how to pronounce your name once again? Fredley?
Freudly.
Fredley. Okay. I will remember this. So, downside range has been swept. This might be a new concept for you, but actually I told you this in several backtesting sessions and several recap videos too. So just pay attention to me. If there's a range sweep, for example, there's a range, and this range is being swept on the downside first, and after the upside, there's a high chance that after the downside sweep and upside sweep, price will continue the movement to the upside, because price will usually continue the movement in that location where the last piece of liquidity is being swept. So if the upside is being swept first and the downside is second, then it has a high chance to create a downside movement react on this supply zone that has caused the downside sweep. So price usually continues the movement. If there's a range, of course, I'm talking about ranges, price usually continues to the overall movement in that direction where the last piece of liquidity is being swept. So once again, if the downside is being swept first and the upside is being swept second, then the upside sweep, after the upside sweep, price will continue the overall bullish movement. If the downside sweep is being swept second and the upside is being swept first, downside is second, then price has a great chance to continue the overall short movement. These are just a simple conversions of the orders, old orders, new orders. I won't talk about this fundamental because this is actually pretty hard to tell about and pretty long to tell about. So I just stick to the backtesting session. I'll just stick to the technical part of the analysis. And just remember for this, if there's a range and whichever side of the range is being swept second, price has a high chance to continue the movement in that direction that has been swept second. Is it understandable? This might be a new concept for you, but I've been told you about this already several times. Okay, so just pay attention to these scenarios in the future. Thank you, guys. Delete your drawings, please. So, okay, as you can see, downside has been swept. Delete your drawings, please. Thank you. Downside has been swept. What will happen after a downside sweep? Of course, we already know. If the downside is being swept, upside will be swept too. Upside has been swept. What can we do in this case? I saw that lots of you guys were panicking about this liquidity line right here that has been built up for deeper demand area, for example, like this. I saw that lots of you guys were panicking about this liquidity region right here because there was a perfect candle that has caused the upside sweep after the downside sweep. This could have been a really good opportunity. And I almost took this opportunity, but somehow I didn't open this. I had the limit order on this demand zone. But after this, I was insecure about this setup. Then I was thinking like, okay, if I'm insecure about the setup, I won't risk it. I only take the high probability scenarios. But this, after backtesting, I backtested this day. This was a really high probability setup. Just by the simple range conversion, just by the simple liquidity sweeping movements, just by the simple strong character changing, just by the simple liquidity sweep on the downside. So this was a really strong setup. And I know that you'll ask that there's liquidity below this POI. Yeah, there's liquidity below this POI, and that's the key, below this POI. So this POI, this demand zone, is not directly part of the liquidity. So it's not directly part of this liquidity. If the POI would have been right here, I wouldn't open a position on that demand zone. But this is a different scenario because price has swept a range before creating another liquidity. And more likely, this liquidity will be created for further price action areas. So for example, after the supply zone is being tapped, then we can expect this liquidity will be swept. But price has swept enough liquidity. Price has swept enough liquidity from the range. So swept the downside range. After the downside range, it swept the upside range. And this downside range was enough to reverse price to the upside and enough to sweep the upside range too. So more likely, price doesn't have to collect more liquidity from the downside, right? So because price has collected enough liquidity from here, it doesn't have to collect liquidity from there. Downside range, upside range, sweep, continuation to the upside. And once again, this was not directly part of the liquidity. And I'm really, really sorry about that. I couldn't open a position right here, mostly because my emotions were triggered and I did really want to enter in a high probability setup only. And I didn't really believe that at that moment, at that specific moment when I was putting the limit order on, that this was a high probability. But after backtesting this price action day, after backtesting this Friday, I just realized that this was a really, really high probability setup. And this could have been a really, really good setup for me. Why? Because I had a whole narrative. I built a whole narrative for myself. And this price action was following my narrative. What was the narrative? That if price can create a strong change of character or a simple change of character and create a liquidity and some liquidity sweeping movement, that was the narrative, right? I can enter in a trade. And that was the whole narrative that I didn't take because of my emotions. This will happen to me. This will happen to you. This will happen to everyone. But this will happen, period. That's all. You have to deal about this. As you can see, if I play price forward, price will perfectly tap this zone. We've been tagged in this trade. And why am I using these demands on this week? Because the wick is deeper than the whole candle before the inversion movement. So tag after this price will create a huge inversion movement to the upside. Simply based on this pure logic that liquidity to take, liquidity to target. That's all. Literally, market is moved by liquidity. Liquidity is the key element of trading. Liquidity to take, liquidity to target. And of course, you have to care about the structure too. But as you can see, it's all about this, all about the main trend. Combining the main trend, combining the higher time frame, not just a simple 1 minute main trend, combining the higher time frame main trend, which is the 5 minute and 15 minute in this scenario, we care about this scenario, and combining the 5 minute and 15 minute with the 4-hour main trend is the strongest setup that you can ever dream, about and wish for. As you can see, 4-hour is extremely fucking bullish. 15 minute is extremely fucking bullish because price has changed character on a strong point right here after reacting on demand zone. 15 minute has turned into fucking bullish. 1 minute, what about 1 minute? 1 minute has swept lots of liquidity and 1 minute has created a change of character. But there was liquidity sweeping movement everywhere. And as I said, explaining this scenario, downside, upside, this lines up with the main trend too. So basically, this could have been a really, really, really fucking good setup for me or for us, but I didn't take it. That's all. This supply zone will be tapped, as you can see. And inside of the supply zone, the 5 minute supply zone has been tapped also. This was a 1-to-14 risk-reward ratio opportunity. Nice. At least we backtested this, right? At least we backtested that scenario. We know that in the future, we'll take these scenarios. And we'll know that we will go for this trade. We will go for this setup, regardless of any kind of emotion that we are having. We will go for this setup. That's the importance of backtesting. That's why you have to backtest your mistakes. Because as you can see in this session, I didn't open this position. I realized that there was a position, but I didn't open this position because of my emotions. After just calming my mind down, calming my brain down, and taking a nap away from trading. I'm sorry, I can't speak. Let me just drink. So just simply taking a day away from trading, I just realized that this was a fucking good opportunity for me to take, and I will implement this to my trading plan. I will care more about these kind of scenarios. That's all. That's all you have to do. If you're making a mistake, if you're missing a trade, if you're taking a loss, if you're taking a break even, just backtest your fucking mistake. That's all about. Trading is all about backtesting. Trading is all about learning, practicing, and refining your fucking edge. You have to refine that fucking edge. That's all about it. If you're making a mistake, and the mistake is inside of your edge, so your edge was allowed you to take that mistake, then you can fucking refine your edge. That's all about. Trading is all about refining your edge and fighting against your emotions, of course. But you can fight against your emotions if you refine your edge. Because if you're having, sorry for swearing, yeah, if you're having an edge, if you're having a working edge, you won't be having emotions. If you're having a working edge and that edge appears, then you'll pull the trigger regardless of any outcome of the trade. And you'll be happy if you're taking a loss because you traded your edge. And I don't know, guys, how can you understand this, or why can't you understand this, that you have to build an edge, you have to build a narrative, you have to build a plan. I'm telling you this every single fucking session, literally every single live session. I'm talking about edges. Every single recap video, I'm talking about edges. Every single case study, etc. I'm talking about how to build a narrative, how to build an edge, how to build a plan. And that's how you will become a successful trader. If you're having an edge, And if you're trading that edge, regardless of the outcome, you'll become successful. That's trading all about. Let me just continue. Sorry for the long talk. Let me just continue with the backtesting. So TP hit. After this, price has tapped the 5-minute supply zone inside of the 50-minute zone and broke over that 5-minute supply zone, but the 50-minute still remains unbroken. Here comes an interesting part that lots of you guys took as a mistake. Okay, let me just play price forward. Reaction on the supply zone, right? You could say that this was a character changing movement because actually this was a character changing movement. But here's a simple fucking mistake about, sorry for swearing, I will stop swearing, but you know, just the emotions and the passion. Sorry. So that was a character changing movement, but this is a counter trend trade. This is strongly a counter trend trade. And if price character changes right here, it has to character change right here to take any short opportunity. But price only character change here and not here. So you can't open a position on this supply zone because there's a high chance the price will sweep this supply zone. Actually, as you can see, this supply zone will be swept. It has been swept. But here are signs for the weakness of the bull run, and here are signs that price will hold this supply zone and we will be able to open short positions. What's the sign? That this supply still holding price. Price still can break above this supply zone. There was a break of structure to the upside. And just compare the change of characters right here. Low point, strong character changing point, weak character changing point, weak character change. Let me just play forward. Strong character change, right? Meaning that this character change right here was just a simple weak character changing point on a simple inside bar. This character changing right here was also an inside bar, but this is a swing low point also. Just compare the low points, compare the demand zones, compare the character changing points. Swing low point is right here for this character changing movement. Swing low point is right here for this character changing movement. So basically, after reacting on this supply zone and couldn't break over this supply zone, prices created a strong character changing movement and changing character on a swing low point. This is a sign for the weakness of the bull trend. This is a sign for you to pull the trigger and go short. And as I said, we build this in the narrative. I sent you this in the markups. I sent you this in the markup updates. That if this supply zone can change character, then we'll be able to go short. We'll be able to take profit at, for example, below the liquidity line. As I said, below the liquidity line, there's this demand zone. There's this demand zone that is perfectly below the liquidity line. And as I said, this liquidity is formed for the upcoming further movements, not for this price action movement to sweep this liquidity, because price has swept liquidity. You have to understand the liquidity. I've created lots of videos about the liquidity, and I will create more videos about the liquidity. And that's why I'm creating this webinar about the liquidity too, because you have to understand the importance of liquidity. Liquidity right here, it has been swept. Liquidity right here has been created for the upcoming shorts. This is for the further price action, not for the current price action here. This is for the further price action after the supply reaction. And this lines up with the narrative too. So coming back here at this region, the strong character changing movement has happened here, as you can see. Where did it happen from? Market, please. Anyone who raises their hand. Who was the first? Let me just check. Fraudly, sorry, I still can't pronounce. Exactly. That's the right supply zone. This is the right supply zone in this case. Now, why is it the right supply zone? Because this is a flip zone. This is not just a character changing movement. This is not just a character changing supply zone. It's still a flip zone. Because as you can see, here was less piece of demand. This was reacting on demand zone. This was reacting on demand zone also. Flip did happen from this supply zone, meaning we can set a limit order on this supply zone. Because strong character changing movement has happened, higher time frame supply zone has been mitigated, liquidity has been swept. This was the liquidity right here because early sellers have been taken out from the market right here. Flip has happened, character changing movement has happened, and there will be a liquidity creation for this zone also, if you pay attention. And that was a 50% entry point, yeah, because price did not, I mean, the 2 pips stop loss couldn't cover the whole zone. So this was a 50% entry point, targeting these demand zone down here. And as you can see, because simply mark the supply zone out, but this was on the origin of the character changing movement. This was a continuation. The character changing has happened from this supply zone with body break, as you can see. There was a body break, body flip, body character change. Okay, if you pay attention to this price action scenario, price will react on this supply, create liquidity. There's liquidity. Now we can 100% go short at this supply zone because there's liquidity creation, less criteria for this zone. First tap, second tap. That's all. We don't care about the supply zone, demand zone. We don't care about the demand zone because all of the criteria are in front of us. This is just a random stop in the market. This isn't a demand zone. This is not even a demand zone. There's inefficiency below this demand zone also. There's liquidity below this demand zone. This is just a random little stop in the market. So this, yeah, there's a footprint of price action. Price was reacting on this supply zone, demand zone. But supply will be stronger because supply could have strong change character right here to the downside. It could have sweep liquidity, could have created liquidity, could have created flip zone, etc., etc. There's liquidity lined up for the shorts. This is not a demand zone right here. This couldn't take a supply out. Could this demand zone take a supply out? Could this demand break above any supply zone? No, it couldn't take a single supply out. Couldn't break above this supply, couldn't break out any single supply zone right here. This isn't the demand zone, couldn't take a supply out. This will be a supply zone because this could take out the demand right here. Just weigh your zones. That's why the criteria tracker is for. That's why you have to use the criteria tracker, basically. So liquidity creation, liquidity sweep, bam, entry, in, tagged in. Okay, 2 pip stop loss targeting the liquidity area because below this, above this demand zone, there's liquidity. As you can see, session will be closed in 15 minutes. So it's just time to let it run. That's all. That's all about this session, basically. There were 2 crystal clear opportunities in this session. Both of these opportunities were for 1:15 risk reward ratio. 2 single scenarios for this session, 2 single, not single, 2 can be single, but 2 scenarios for this session, 2 extremely high probability setups. Compensates for the whole week of losses. From these 2 trades, you could have booked 30 risk reward ratio, not BB, error. You could have booked 30 risk reward ratio from these 2 fucking single trades. And these 2, these 2 trades, this 30 risk reward ratio compensates for all the fucking losses on this week. Just understand this, guys, that you can lose, 10, 15, 20 in a row. You can lose fucking 20 trades in a row and can still be profitable. You can still be profitable with 20% win rate. Actually, you can be more profitable with 20% win rate than with 70% win rate. Just think about it. There's a game. Let's just say there's a type A guy. Type A guy has a 20% win ratio. 20% win ratio, and all of these trades are hitting 1:15 risk reward ratio minimum, right? Type B guy, this type B guy has a 70% win rate, and this guy is hitting 1:3 risk reward ratio trades. With the 20% win rate and with the 1:15 risk reward ratio trades, this will be a higher profit. This will be a higher risk reward ratio than this. Just imagine, just think about it. Just think logically, guys. Literally, stop panicking. You don't have to care. You don't have to care about your losses. For real. If you're taking losses in a row, if you're taking 5, 6, 7, 8 losses in a row, just calm your head down, chill down, and only take the higher probability setups. Don't force yourself into fear of missing out trades. Don't force yourself into bad trades. Just calm down and wait for the best possible scenarios. As you can see, in this session, we could find 2 fucking good setups. Jesus. Both of these setups did hit 1:15 risk reward ratio and has compensated for all of the losses for this week. That's what you have to understand, guys, that you don't have to panic, you don't have to rush, you don't have to go FOMO. If you're losing, if you're having a losing streak with 5, 6, 7 losses in a row, you don't have to panic, you don't have to rush, you don't have to FOMO. You just have to calm down and wait for the next best possibility, which will be shown up. Trust me, there will be high probability setups on every single week, and catching one single high probability setup can take you, for example, 15 and 20 risk reward ratio. Catching one single high probability setup, that's all you need. Literally, that's all you need. And that's what you have to understand, guys, that you don't have to trade every single character changing movement, just like I showed you right here. You don't have to trade every single character changing movement on the 1 minute chart. You don't have to trade every single character changing movement on the 1 minute chart. Once again, you just have to build a narrative and trade with a higher time frame. That's all. So yeah, guys, it's already 9 p.m. So asking you, let me just see the questions right here. Got a question? Yeah, it's enough money for a month, literally for a month, it's enough. Thomas, why would I put a flip? I mean, limit order above. Where did the flip happen? Where did the break happen from? From this candle, right? The flip has happened from this candle. Inefficiency, where is inefficiency? Here, between this candle, low this candle, and high of this candle. There's no inefficiency. There's no inefficiency. There's no inefficiency. The flip has happened from this candle. The inefficiency has happened from this candle. That's all. It's 3 a.m. right here. That's the discipline, right? Okay, guys. What do you think about this session?
Can I ask you a question real quick?
Just wait a minute, please. Did you like this session, guys? Was it good to actually explain the whole price action behind this day? What your impressions about this session? Please just let me know what you think about it, or I will ask it in the Discord. So yeah, if you can leave a feedback in the Discord channel after I'm asking for a feedback, it will be really appreciated, because you're giving me a feedback, either if it's a bad feedback, either if it's a building criticism, or either if it's a good feedback. It is really appreciated. So guys, if I'm asking for a feedback, please just try to leave a feedback, because it helps my work so much, and it actually gives a feedback to me about my sessions. So yeah, it's 9 p.m. So I gotta go. I have to prepare for something else. I have to prepare some food for tomorrow and cook some food too. Okay, so once again, thank you guys for being here. I will upload the backtesting session to the Telegram channel. And yeah, thank you guys for being here once again. Thank you guys for being part of the community. And see you guys tomorrow with the markups. See you guys with John's London markups and my New York markups. And yeah, guys, still love you all. Still wishing you a beautiful rest of your day. Thank you for being here.
Thank you for being here, guys. See you tomorrow with the
And
London
don't forget
session.
to leave a feedback.
Yeah, don't forget the feedback, guys.